Good morning, everyone, and welcome to the European crossover webinar. Most of the market has stayed pretty stagnant, including crude until just recently we did dip to that 40.95 area. That's that area I mentioned yesterday. That was actually the reactionary low right after the news of the freeze that had come out over the wires. Now, yesterday I'd gotten up early during the European session because I was looking for them to go down to that area. And they went down there and actually got as low as, I think it's 40.85 or 40.84. But that's what we've gone to. That's, like I said, the market always remember those levels. And why I stress that everything is about the levels. But as far as FX, everything's been in a relatively tight range. Seen the dollar yen has slipped back a little bit. And we have seen cable rebound a bit. And the euro's pretty much stayed within its range. Same thing with gold. Gold hasn't moved too much. So everything, even including the S&Ps, haven't moved that much. I wasn't expecting that much on either one. So as we look out to see what came out as far as economic reports, not really much of anything. As we come into the U.S., we are looking at preliminary University of Michigan, and we also do have industrial capacity and utilization. Now, industrial capacity and utilization, they come out at 9:15 Eastern Time, and then University of Michigan comes out at 10 a.m. Eastern Time. The only thing we have at 8:30 Eastern Time is going to be New York Fed manufacturing. That will be out. Also, Canadian manufacturing sales. It's not of any real consequence, but the New York Fed manufacturing might move the needle just a little bit, not much of anything. Coming in today, I really didn't expect the markets overall to move too much because it's the moves happened on earlier. Case in point was like the euro. So it's not like as if we're in the second day of this move. So I don't think there's anyone that's being pressed too hard, on that side of the market versus, let's say, the dollar. But I'm just using the euro as an example. If they've already been in a bad situation, they already know they're in a bad situation. It isn't something that, as I mentioned before, is that, let's say, the euro dollar just topped, let's say, day before yesterday, and maybe there's some people still hanging on. We already had a pretty good move here in the euro, so those that did get run over already been run over in all likelihood, for the most part, were forced out of their positions. So it's not like as if the market's being with that concern that maybe that's going. That doesn't mean it can't fall off, but obviously you can see the way the market is sat here, and we'll get to the charts. It is indicative of that, which I didn't expect much. In the crude oil, we finally did slide. Like I said, I've never even seen crude this dead, where it just sat there basically in 20 cents with a little minor pop out of that for the course of what looks like. I don't know, like 5 hours or something like that. Just now we'd gone and dropped off, but that's just them testing some stops. Like I said, with going into the weekend with the dough. And not that everything's pretty much set in stone, but there's always a risk in case something happens. And I know I certainly wouldn't want to be holding a weekend. I'd rather just go in and come in next week and see what happens on that. But we're going and move into the charts. So you can see how we've just been sitting here in this area. If you remember yesterday, I was discussing with Blake when he came on. I just don't see that there's a whole lot. And then on top of this, you had this hammer bottom. Now, that hammer bottom is good for the initial movement, which I would say like stretching it here to maybe there. So by now, the market already should have rallied. And generally, when you see something like this hammer bottom, it usually happens by this part here. But we've gone and hung around here in this area for a while. It doesn't mean, like I said, we can't push lower. And as I mentioned, 1214 is this, mentioned yesterday. 1214 is 78% of this whole area. I want to say this whole area, but essentially 1144 up here, the highs that we set here, 1265. So they can make a dip, and I think that would be defended. Worst case would probably be this 1192. That being said, I don't know what the catalyst would be to push them now, going in towards, into the New York session and throughout that. I don't think anyone's positioned that badly. I think if they would have already tested it here. Once again, doesn't mean that they can't start to slip, but you can see there's just no real catalyst to move us in either direction. We talked about this yesterday, and the challenge here, if they would have, obviously they didn't get it up higher, but would be into this 1312 area. You can see here this level. This is where, and like I said, I wasn't an advocate to short this thing because if that was too early, as I was saying, if you're hell bent to do it, then the 1286. Maybe as we came up to 1297, I don't know. I'll be honest, I don't even know what the high was on this. I would have had some interest at 1313, but not before then. So what was high? 1295. Oh, it's almost it. Like I said, I thought 1297. Maybe it was at that 1293, but even then I thought, I remember saying, let them punch 13, sell into 1302 or whatever. So I never really even got there. But we did go on and pull back, but the market has basically not done a whole lot of anything with it. We can take a look as far as any fibs on the way back. And 1322 would be the 38%, which actually would coincide right here. This is where the market ran out of gas. You remember day before yesterday, it ran out of gas like at 1327, and the return high, which I thought would take us at least into the 38, maybe the 42, which I thought would have been a great area to short. We didn't have the juice to even take out the reactionary high off of retail sales, which was 1327. So this 1322 would be the 38%. We can go and mark that off. But I think that the better area to come in, I mean, the 38%, but like I said, you're not even taking out even the secondary reactionary high, which I think is like 24. Okay, actually, it must have been even a little bit less than that. I've got 22 here, but the reactionary high off of the retail sales was, as I said before, 1327. The market remembers those levels. As I mentioned with you, although it's already now a couple of days old since we did this, you know what I'm saying, about the retail sales. Case in point was the crude oil at 40.95, and we've gone down there. I mean, now we've kind of exceeded it. We've come as low as 40.91, just on the slows right now at 40.90. And that's when I got up very, very early yesterday because I was looking for the market to go just to that level. And I didn't want to miss it because I thought that we'd be going to that level early in Europe. And, you know, sure enough, we went down there. You know, we had, in the Asian session, I'm talking about not last night, but the day before, we had slipped into like, made it down to like 41.31, and then hung around there. And then we kind of slipped down into the 41.09 area, and the market was, it just didn't look like it didn't have a bid. And finally, when it dropped lower, that's when I came in at 40.92. And the reactionary high was 40.95, and the market still dipped lower to go as low as, I think it's 40.84 or 40.85. And I was even going to buy some more at, I think it was 40.80. Yeah, here it is, 40.83 is a 50%. So actually they did make it, you know, I mean, they got it to 40.84, but I had some support. I think someone was like 40.76 or 40, yeah, I think it was 40.76. They're actually punching on the high lows now. They're at 40.77, 40.76. But like I said, I thought they'd go in and visit that. So the market, well, my point is the market remembers those lows. So they're working lower here. So like I said, on the upside, I think the key area of the euro is going to be this 13.12. But, and you'll probably see some resistance considering how weak it's been. You'll probably see them push back in here. Ultimately, they can make it. I would feel more comfortable shorting this thing as it came, even beyond 38. I'd fall something like around 13.42. And yesterday we talked about this 1236 being the key area. Like I said, we've sat down here for so long, probably going on to a Friday session, probably would seem more likely that they will try and push them a little bit higher. Maybe if some people got short thinking that, you know, we're going to move much slower. I don't think it's going to be significant, but maybe at the very least, my guess is they'll take out this high. And we reset that's 12.95. So at the very least, we're going and challenge to take out the 12.95. We'll go and take a look here at the dollar yen. We were able to go and get past that 953 and just hit some stops, but it's run out of gas here at this 971, and we're pulling back. But this 892 is decent here. If you want to go just beyond that, is right here. And we'll take a look at that level, which is 877. Okay, and 893 would be the 38% of this move. We'll go mark that off. So this is kind of your backstop here. And actually 892 is a level here, if you take a look at that. So here in your dollar, you get this little backstop here of 877, between 877 and 892, kind of like a mini zone. So 893 is going to be 38% of this recent move of 766 to 974. If you're inclined to go and step in, I'd probably let them punch in towards this 877, and you'll see the market probably give a little bit of a pushback there. And we'll take a look to see what's going on with the cable. This, as we talked about, has fallen further than what I expected. I mean, they haven't gone to the lows here, but that still doesn't say a whole lot, which is the worst case I thought that they would have gone was down here to 41.78 before moving higher because of concerns with the inflation. That being said, I think you'd be precedent if you really thought they'd come all the way to the bottom. But I'll tell you what, they made a pretty good doggone move towards the bottom. So we'll say that. Give me a moment. My guess is that at this point they're trying to push them up a little bit higher, which would take us right here into this level. You can see it's a mess, which is the way that cable usually is. It'll just hit on both sides of the market. So you can see here, this little zone here, won't even call it a zone, is probably where they'll find some trouble at. right in here. My guess is they'll probably make a stab probably towards the middle of this, which is probably like 42.25. Right there. Probably make a move towards this area here. It's 42.40. So my guess is they'll try and punch him up here into this zone here. But I never thought they would have gone and dip this far low. But like I said, that news was still key on the inflation. Obviously, why we punched them up so high, which I thought they were a great short. But I thought ultimately this 42.60-ish area would have held for them to punch higher. So they came in here, so all those people that were short, if they were still hanging on, all had a chance to bail out. Although we've seen the initial reaction, but then the market just sit here and be quiet. And then now we're working higher. My guess is we'll punch it into this zone. I think any moves up to 42.25 are pretty doable. So let's go and take a look here at the dollar CAD. We talked about this being a good buy. Actually, it's turned out to be an excellent buy from a risk-reward perspective. As I mentioned, I tweeted out here at the lows is an excellent place to get long for 27.50, and we've had a great rebound. My suggestion was to jump out on moves up to 29.15 initially, but my target is for 34.50. But take those off and then reload again. We almost made it there, 28.97, and then we got that pullback. This is what I was looking for. Move to pop these stops here, just get above 29, pop some stops, and then pull back. And we missed that target by what, 18 pips. But we've seen this pullback, which we did get a fantastic pullback of over 100 pips. And then you saw the market come right back up. We've made another dip. We're trying to work them up a little bit higher. But that's my thinking is that, maybe you're looking for 700 pips, but don't just sit there and see your P&L go up and down like a yo-yo. As they come into areas, take some off and then try and reload back. Overall, I think it's okay. Obviously, if they come up to 27.15, 15, I think that 29.15, I should say. I don't think that's enough now. I think we can look for a fib here. Which is going to be 29.26. So probably on any moves to like 29.30, then you could lop some off. And that's 29.43. So it's already time to go and take a break. When we get back, we'll look at the Aussie dollar, and we can go on and take a look at gold. Frederick says hi. Good morning, Frederick. So we're going and take our break. And when we get back, as I said, we'll take a look at the Aussie dollar, and we'll take a look at gold and these other markets. And thanks for joining us here on the crossover. It's a slow Friday, especially in FX, so we'll take our time moving through everything. Okay, buddy, and welcome back to the crossover. Take a look at Frederick says, Polly, how do you view trading on Fridays in general, and how does the professional forex trader view Fridays? Are they clearing out positions? It has more to do with how usually what you look for on Fridays is how the retail trader might be stuck. Because in Forex you have a lot of retail traders. And this is what I was talking about, let's say this was Thursday in here. Let's say here, yesterday, and the market was just falling apart, then I would think that there's still a lot of people that are long, and you would be able to force those people out of their positions, and we'd be going like this, okay? But this was Thursday, so most of these people already got knocked out of their positions. Anybody that was long, and you can see here, we hung around up here for the longest of time, okay? So anybody that was long, and this would have been just from here if they'd been riding it out, but you know, anyone that's long in here, let's say around 14, 1370, if not even long, possibly above 14, like 1425, those people have already got knocked out of the boat. Because at this point, at the lows, they're already down close to 200 pips. They're already gone. I mean, if you're in a trade and you're saying, okay, yeah, I'm a small trader, even if you're not, but I'm a small trader, now I'm down 200 pips. Maybe that was a high. You know what? Maybe I'll just hang on for another 150 pips. That doesn't make any sense. So I'm saying is, it's all about positioning in time. And what I mean by that is, as I mentioned here, is if this was Thursday, then I'd be saying, yeah, we got more to go. Because anybody that was long here in this whole area, all that here, they were saying, oh yeah, we're going, remember all the bozos, we're going to 117. We're going to 120. Remember that? I mean, not that we couldn't go, my ultimate outright target was 1730 overall, but it never fails. You make a move up here, I hear 120 more than I don't know what. So anyway, the thinking is, anyone that was here was saying, oh yeah, it's only a matter of time, we're going to 120, it's pretty obvious, blah, blah, blah. Well, these people aren't getting out anytime soon. So, you know, they say, oh yeah, now we're up here at 14, I'm adding on to positions at 1430 or whatever. And so they've kind of loaded the boat, and for good reason here, because we hung around here for so long, okay? So long here. So as the market starts to drop down, they're like, I'm not worried about it, it's going to come back up. And so this is what I was talking about. As you come into here, then people are, let's say if this was yesterday, being a Thursday, and like I told you about the end of the Friday, traders, a lot of smaller traders, forex retail traders have to get out of their positions, or you know, don't have the the financial wherewithal to hold, these positions if they're down. So you get in an area like this where, like I said, if this was a Thursday, people be like, oh, I'm not too worried about it. It's okay. Then they wake up and they're like, oh my God, what the heck? And then they see the market sliding even further and they go, well, I'll put my stop at 1338 wasn't, maybe I'll move my stop to like, I'm pretty sure they'll hold at 1312. So as this market starts rolling over, and this is what I'm talking about, coming into Friday, then all these people are caught on the wrong side, and then it's the avalanche kicks. And then this person's like, well, there's my stop at 1312. I mean, they can't go that low. When I'll move, how about you, Joe? Well, I'll move my stop here to 1288. 1288, you're crazy. No. Well, I got my stop at 1312. I hope it doesn't get hit. Whack, it gets hit. Then the other guy, Joe, he's hanging on. Here's his stop at 1288. Whack, he gets hit. And then you see the constant drip off, okay? But this was Thursday. So all these people, they pretty much already got knocked out of the boat. So that's what I'm saying is from a position standpoint, there isn't a whole lot here now. That was my whole contention yesterday about you can't be putting on positions now. A short position, you just got to hammer bottom. And my thing was, wait. If you're that hell-bent to sell it, I think we mentioned that, sell it here 1292-ish, when we were talking with Blake on the air, and preferably, let's see if they can get above 13. Well, they made it only up to 1295 and pull back, but you can see there hasn't been no downside action. Now, the market hasn't turn around, gone crazy to the upside. I think it's just kind of a wait-and-see mode. I think this is an outside possibility, but I don't know when we'll hit it. Maybe we'll hit it after we just fall apart here, or maybe we'll eventually hit it after we move up to like 1328, and then we fail, and ultimately come down to 1214. We're just going to have to go and see how things are going to play out. But that's what I'm saying. It's everything's always a moving target. It's everybody's talking about this level, and as we go lower, I remember telling people, scalpers, I go, hey, cover here on moves to 1365. And I remember even saying in the Wise Trade chat room, hey, look, we got as low as 1348, and it bounced back up to like 40. I didn't go as low, it went, I think, beyond 48. But I'm saying is I remember seeing 48, and then next thing I was seeing 52. And I said, hey, this is way oversold if you're a scalper or a day trader. And then we turn around, and then we got the Doe freeze news, and the market rallied all the way back up to 14. So it's a moving target, because then if you say, well, I thought there was such a great area to cover, well, idiot, it's a moving target. I mean, if you rally all the way back to 114, it doesn't mean the 1365 is not going to hold. Now you have to ratchet your target lower. So we had that 1338 from before. Well, they're going to go and take that out. So this is one of my targets I was looking at. You remember when I was short from 1368, and I was holding for 1329, and the market only got to like as low as 1334. I'm so mad I never did get out of that position, and I had a limit at 1327, but my target was looking for 29, and I said, ultimately I think they're going to make it to 1312. So once again, it's a moving target. So now I'd be saying, hey, this is where I think it's going to be a good area to cover your shorts. Now we even went past that, but it's a moving target. Like I said, just like when we came in. And I think I tweeted this on the Insight call. I was saying, hey, 1282 is a very good area here. And we sat there. And I think even in the Wise Trade chat room, we sat there. Of course, when we came into Europe yesterday, we weren't even lower. And we talked about this, and I tweeted this live, actually on Insight call and on my regular feed. I said 1236 is a very good area here, or is support. And we got as low as, I think, 1234. And then we rallied back. And then, of course, we had the heavy bottom. So anyway, that hopefully that answers your question. Usually on Fridays I keep it kind of light. I don't think you have to keep it light on crude oil. Not necessarily the S&Ps either. But the only thing with crude oil, you have to be careful because of that Doe stuff. What the market wants to do, I think people might start to get a little bit light as far as trading as the day starts to go on. Yesterday I had a trade that I wanted to sell it. I was hoping to sell it on a rally, or my whole thinking was, okay, sell it on the close. And I was looking for a move down to about 41.40. Worst case, and going into Asia would be like the 41 teens. But then RBOB started falling right before the close, and that threw away my trade, because then ultimately got to my level, 41.41, actually went even a little bit lower, that was my level. And I was looking there for the market to close around 41.72, and then I immediately went to sell the pit close, and then watch the market just start to slide later on. Although the slide ended up happening all within the last 2 minutes or 3 minutes right before the pit close, because RBOB went to heck in a handbasket. So let's go and take a look here at the Aussie dollar. It looks like we made it up to, okay, the 38. So this is that zone I was talking about, 49 to 76.66. If you're short, if you want to be short, I would wait till we get into this area. And I talked about that. We did pull back, but like I said, this market is still holding. So if you're initiating short positions, I'm not talking about a scalp, because we know how the Aussie can just get going. Then I would wait till that area. Preferably let them take it at 77.50. But this 77.49 to 77.66 is pretty good, with 77.89 at your back. If you want to short it, I'd see if they can get them. I told you before yesterday, 49 to 77.66. I even told Blake, let them hit some stops. If you're anxious to short it around 77.57-ish. Let them take them out that 77.50. If you want to be short, I just think I thought it was too early yesterday to try and short this thing. And I'm not gonna, there's no way in heck I'd be scalping the Aussie dollar. The only time you want to scalp the Aussie dollar is on these report releases. And I'm talking about their own respective report releases, not necessarily the U.S. report releases. Andrew says, good morning, Paul, and happy Friday. Think oil at some decent support. 200-day moving now, which are a big set. What kind of downside are you looking at? Thanks as always. Well, I mean, it's even gotten pretty low. We've come into a key area this morning. We'll take a look at oil. Dotto says, hi, Polly, I know you don't look at silver, but silver's closely correlated with gold, and gold dropped from the highs, but silver did not. Some divergence, any thoughts? We'll take a look at gold. And Adam says, nice call on the dollar CAD. When does the WTI roll over? Well, it's already rolling over, but I mean, I think that you'll see more of a rollover once you get past this stupid DOA meeting. And that's what I was talking with Steve Bilby yesterday on Blake's show. I came in, I said, I think this is just going to be it for crude. And it's just that news came out about RBOB, which gave it that extra boost. I was hoping crude could really get beyond 42.49, but I thought that yesterday was it. I said, this is, and I even tweeted that out. I said, in all likelihood, this is probably the top. And I really believe that. Oh, Adam says, sorry, I meant the WTI contract rollover, not the price. The rollover is usually like around the 18th or the 19th of the month, something like that. Honestly, I don't even pay attention to any stuff. I look at the continuous charts, although when we immediately do the rollover, I'll look at the actual chart. Let's say that obviously we're rolling over to June. I'll look at it for the next like 2 days to look at what it's been hitting. But all my stuff is based on the continuous charts. I'll tell you what, I do pretty doggone well. So I only look at the actual contract month when we've, and the reason I did more so with May this last month was because there was such a premium. Remember, the premium was like $2.50 or something like that. So I needed to look at May to see what levels it was hitting until we came in kind of confluence with what's happening in the continuous contract. But usually, that's all I look at is the continuous contracts. Frederick says, can you look at the dollar Swiss? Maybe a chance. I don't know if we'll get a chance to look at dollar Swiss, and that's Blake especially. I'll take a look at gold now. But I really wouldn't be taking this on until about, like you mentioned, you can do what you want if you think it's going to run out of gas, but I think the preferable area is this little zone between 77.49 to 77.66, because you know you've got 77.89 at your back here. And Aussie, just when it trends, it loves to trend. So if you have to be short, I would prefer to take it on in this area, because you got 77.89 at your back. We'll see what happens, but it does love to trend. You might have to wait till Monday before you get that price, but we can see what happens. And one of the things that's worrisome is that the gold market is still not doing well. We talked about this before. I keep saying I'm going to short this at least with a mini contract, and I'll be doggone it, I just don't do it. Here we talked about this. We talked about the 1263 and how it was diverging there because the dollar was falling apart. Gold should have been higher, and we were trading here. Matter of fact, remember, we talked about that. I tweeted this out, even on the regular feed. I said 1263 is like a minor bias pivot because the 1239 has been huge. Okay, and it wasn't reacting as well, and we were already down $5. I think it was $4. We were trading 12.58, and that's why we said, you know, I don't know why. I probably ought to just get a mini contract and just not even think about it. And here we are. We've already lost $30, over $30 from that area. When I said, I don't even know why I don't throw something on. I'm not sure if I can do it now, but yeah, it certainly looks like it wants to just go weaker. Next support below this is 23, and I would think really beyond that is 1620. This is if you're short and you're looking for an area to cover on a real swoop down. I think a swoop down to 1620 is going to be good. 1215 is key, but I think 1620 will see some pretty decent short coverage for a pop back up. So we can go in and take a look here in the crude oil. Also, my target on the S&Ps was, my stretch target was 1282.5. We got as high as 1281.75, so I'm off by 3/4 of a handle. Let's go and switch in. But on the S&Ps, I think we'll probably punch them up there at 1285. I would not be short S&Ps or say, oh wow, it got up to that area. I mean, we are off 8 handles from those highs or 9 handles, but it can go to highs and maybe, because we're going into a Friday, punch them up even higher. But like I said, that was my stretch target, 1282.5. We made it to a 1281.75. So let's go and move into the crude. You can see here on the RBOB, we've come into some key support, which is 47.09, and we actually even dipped below that, 46.73. So I would be looking for the market to go and hold it here, and we took this dip into the 60s, which is pretty good stretch lower. We probably put in the short-term bottom in here, and I didn't even update my levels, and that's what I'm telling you is that, like I said, every night I have to do this all the way across the board. And it's an arduous process. You can see here I have to drag all these over, but it makes a difference in the sense that, you know, some of these calls on these levels that I get, where I look at confluencing in, you know, the fibs, and then looking what's going on in RBOB and Brent, and then looking how we are on the footprint to catch different turns in the market. Certainly make a big difference. But we're in a key area here, which is 40.57. The low was 40.60. And we've come into a major level here on the RBOB, 47.09. We were able to overshoot that, which is 49.69. And we kind of like hold it right in here. Actually, the low is 46.69. Oh, 46.86 is where we're at right now. And RBOB 42.94. So, I mean, if I don't have any trades on right now, but if I was, I'd definitely be looking to cover any shorts. I think this is, a bit of a stretch here at this point. I guess we could take a look at it on a, what would you say on the Fed, because it never even challenged it this high here. So 40.46 is going to be the 61%. Let's see here. So they might be able to stretch them a little bit further. Actually, 40.46. Look here on the 2-hour chart. So I go back to what I was talking about yesterday. The day before that, a gentleman was asking me, "What do you look at to trade the when you're day trading? Do you look at the 2-minute, the 5-minute, the 15-minute?" And I was telling him, I go, "Hey, look." No, I look at the 2-hour, the 30-minute, and 5-minute. I've got this marked down to 15-minute. Need to go and adjust that here. And look at the 5-minute, and I look at it. I try and find confluences within even the different time frames. So, we're into a very key area, but New York may try and punch them a little bit lower. So I've got 40.46, which is a 61% of the move down to 39.24.
Good morning, Paul.
Hey, Blip. Oh my God, it's already 6 o'clock.
It is already. It's Friday, too.
What'd you say?
It's Friday.
Oh my God, I'm so glad. I'm so happy. I'm just mentally worn out. I've had a very good week in crude.